Opinions stated by various contributors to the Money and Business Show and related programs are not to be considered as endorsed by Radio Shalom, its employees, TE Wealth, TE Mirador, TE Financial Consultants, or TE Investment Counsels, Inc. Visitors to this program are urged to use their own discernment to draw their own conclusions. Please read your prospectus and consult with your own investment advisor.
Live from the studios of Radio Shalom, 1650 AM in Montreal, Canada, the city of Joie de Vivre, the world capital of culinary variety, and the home of the Montreal Canadiens. This is the Money and Business Show with your host, Samuel Ezerzer, consultant with TE Mirador, a national wealth management company answering to all your financial planning needs since 1972, known as TE Wealth in the rest of the country and headquartered in Toronto. Every week, Samuel and his guests discuss money, investments, financial services, and the world economy. Over the next hour, you can have your questions about business and personal finances answered. So call 514-738-4100 extension 200 to speak with Samuel and his guests. And now, here is the host of the Money and Business Show, Samuel Ezerzer.
Money, and business. Regardless of who wins the White House in the U.S. presidential election, the stock market faces enormous challenges in the year ahead. Earnings are struggling. The United States is facing a fiscal cliff of rising taxes and reduced government spending. Europe is mired in recession and China is slowing down. Even worse, the presidential cycle looms large, at least that's the theory. Stocks tend to move in a bizarre pattern with a few years of the U.S. presidential term, where years 1 and 2 tend to be the worst for stock market performance, while years 3 and 4 tend to be the best. U.S. presidents get down to business in the first half of their term, often with their policies that are not conclusive or to market gains. Research at the Tinberg Institute of Economic Research found that the S&P 500 stock index had underperformed during these years, according to the data going back to 1948. In the second half of their term, U.S. presidents tend to focus on re-election prospects, juicing the stock market in the process. The Tinbergen research found that these years the S&P outperformed by an average of 9.8%. The effect can also be seen in the bond market, where credit spreads widen in the early years of presidential terms and shrink in the third. So its presidential cycle effect in the U.S. stock and bond market is a phenomenon. The election is over. Now what? Will the market start slowly grinding up again? How long can it last? When does the market start its downward move? So, today live from New York, sitting in for Charles Nenner is Mr. David Gurwitz. He's the managing director of Charles Nenner Research. My name is Samuel Ezerzer, your host for the Money Business Show, Radio Shalom, CJRS 1650 AM in Montreal. Thank you for tuning in live with our business studios headquarters in Montreal, the financial capital, and the home of the greatest hockey team, the Montreal Canadiens. We have another great show for you today, and as always, you can call if you have any questions, comments, or criticism of today's show. Please call us directly at 514-738-4100, and the extension is 200. Again, 514-738-4100, extension 200, or you can email me at moneyandbusinessshow@gmail.com if you have any inquiries. You can also visit our website at www.radioshalom.ca. All our shows are archived there. I work as financial consultant for TE Mirador, has been providing corporate executives, CEOs, families, and employers and employees with independent wealth management and financial education services since 1972. You can visit our website for my contact information at www.temirador.com. So today we're going to be we're going to talk about cycles, specifically what happens after the elections. Today we have Mr. Maurice Cousineau from National Bank Financial. How are you?
I'm doing well, Sam. How are you today?
Good, good. I guess that's it.
Huh?
Yeah, well, it's hectic today.
A lot of things going on. And
well, last night, you know, the elections are over. Obama won. And what Americans were actually thinking, this is, I was just reading a little bit why a lot of Americans voted for Obama, is that the economy was the #1 issue for 6 out of, the 10 voters.
Yeah. The
economy, well, it's not doing very well, but anyways, that was their #1 issue. According to the Exit poll, more Americans blame former President George W. Bush than Mr. Obama for their economic woes?
He hasn't been there in 4 years.
He hasn't been there. Okay.
I remember when Bush tried to blame something on Clinton, he was told, no, Clinton's been gone for 2 years, 3 years.
Well, and also Mr. Romney found strong support among senior citizens, white people, and men, while Mr. Obama won among women, the black vote, and the growing Hispanic population. And not only that, but more than half said that Mr. Romney's policy was in favor of the rich.
Yeah, well, I get the Democratic message got across, and it did okay. Now, also, a lot of the Asians voted for Obama. That's not a big group yet in the States, but the Asians voted for him.
Good. And today's topic, if you have any questions, 514-738-4100, extension 200. Today's topic is no matter who wins the election, cycles show. Okay, these are research cycles show that there's going to be a rough 2013. So I also have today Brian Wolofsky. How are you, Brian?
I made it.
Yeah, you did make it. We were waiting for you. What happened? Don't tell me you were out voting in the States or something like that.
No, DeCarrie and Victoria are both blocked. What can I tell you? You ask me that, and it's always the same thing.
I think I'm going to get a traffic. Every time I ask you the same question, I get a traffic report. Okay, so we're coming in live today in New York. We have David Gurwitz. He's the right-hand man of Charles Nenner. So who is our next guest? Go ahead.
Okay, Sam, our guest is Mr. David Gurwitz. And like you said, he's managing director with Charles Nenner Research. He's been working with cycle forecaster Charles Nenner for almost a decade. Charles Nenner, I believe, his company was founded in 2001. The email-based service provides unique analysis of stocks, bonds, currencies, commodities, and economic indicators. As managing director, David speaks regularly with clients worldwide, meaning hedge funds, family offices, pension funds, brokers, and private individuals. David is a JD, MBA, and CPA. He's also an accomplished concert pianist. I'm sure you're going to get into that.
Yeah, I want to ask him that.
Sometimes pairing up with Charles, who loves to sing. They recently did...
Oh, I got to see that. I got to see.
They did a charity concert special for the Olympics, Special Olympics in Connecticut. Yeah.
Yes, how are you, David?
Yeah, nice to speak to you again.
Yes, you're a concert pianist. You were, how long have you been playing?
Good question. It's the same thing I'm going to get to later, how Charles got into cycles because he stumbled onto them. I stumbled onto my piano ability. I was a basketball player growing up in the Bronx, so I obviously dribbled the basketball a million times, and I went to college in Boston. I was a math major, and the professor, I was taking a course, which I will not quiz the listeners on. The name of the course was Finite Dimensional Vector Spaces. Okay, we'll leave it like that. And everyone hit a wall. Professor said, let me show you music is math. He drew on the blackboard. There were blackboards then, right?
In those days, yes.
A keyboard, and then a Fibonacci sequence. Fibonacci was one of the greatest mathematicians that ever lived. Came up with a sequence where every number is the sum of the previous two.
Yeah.
1 plus 1 is 2, 3, 5, 8. Yeah. That's the basis of the Elliott wave in the markets, by the way. We'll get to that later, God willing.
Yeah.
And it's in the keyboard from C to C in octave. There's 13 keys. 8 white, 5 black, group of 3, group of 2. 1 is black, 1's white. It's all Fibonacci. And I jumped up. I was on the basketball team. I said, I can't believe it. He goes, yeah, music is math. I had a radio show I was doing, but I never played. 19 years old, I ran down to the music building and put my hands down and touched the keyboard for the first time at 19. And I had it in my hand. I was pretty good right away. And I was okay. I started playing, and I was okay. And then years later, I bought a piano, started playing, and my mother saw me playing and said, just keep playing. She never said anything why. And then my parents both died suddenly, another story, within 6 weeks of another, 20-some-odd years ago. And I had kept playing. I got better and better, and I made my first cassette. That's how old I am. And I gave it to my cousin, and he said to me, it's really good, but don't think you're such a big shot. Your mother was much better. And I said to him, Rich, what are you saying? He said, she never told you she played in Carnegie Hall when she was 16? So my mother played in Carnegie Hall. I had this talent I never knew. We didn't have a piano. I played sports growing up. I tried out with the Montreal Expos when I was 16.
Montreal Expos?
Yeah, you might have heard of that team.
Yes, we heard of that team. In 1994, they took off to the...
yeah,
05.
2005, sorry,
right.
So anyway, so that's my music story, and now I have a big website, davidgurwitz.com, that I encourage everybody to go to. I generally play all my concerts for charity. I do Special Olympics. I do a lot of charity events, and it's a real thrill. And Charles,
have you played in Montreal?
I would like to. If you would love to arrange it, I'd love to do some benefit concert for something.
Sure. You know what? We'll get. You know what? We'll connect after the show. Because we have just so much to talk about.
Yeah, we have a lot. Charles is also a musician.
Okay.
He studied with Yitzhak Stern when he was a teen, when he was in Amsterdam. Charles is Dutch.
Yeah.
And he also, if you go to the site, charlesnenner.com, we have a big segment of him singing, because he sings like Tony Bennett. I mean, it's actually... when I call him sometimes, hey Tony, what's going on?
I got to hear this. Yeah.
He's great. He's really great.
But by the way,
we're both musicians. He's an ex-black belt. I'm an ex-basketball and baseball player. He's a doctor. I'm a JD, MBA, CPA, lawyer, CPA, MBA. So we have this kind of funny backgrounds. We're both observant Jews. We both study a lot. He was also a chess master when he grew up. Tremendous thinker, and he stumbled into this cycle stuff that he's now best in the world considered, and I stumbled into him 10, 11 years ago, and I don't know what a sports fan you are. If you remember a guy named Red Auerbach from the Celtics.
Yes, of course.
He trained me. I knew Red years ago. I worked at a hotel, and his daughter used to work there. I used to come visit. So Red trained me on the art of recognizing talent, because ultimately that's what he did for 30 years. He used to pick great players before other people recognized them, and the Celtics were great for 30 years. So when I met Charles, I remember looking at him and saying, what would Red think of this guy? And I said to Charles, you remind me of Larry Bird. And he said, who's that? Because he's Dutch, he didn't know. And it turned out he was phenomenally talented in the field of market predicting. He was working at Goldman Sachs at the time. And we wound up starting a business together, which I think now is one of the biggest research firms in the world.
By the way, I just wanted to ask you just a quick question before we go into commercial. How is New York coping with the aftermath of the Hurricane Sandy?
Everyone's helping each other. We have a generator in my house. I'm inland. I'm in Rockland County, but most of my area was blacked out, so we ran like a hotel for a while. The Long Island in New Jersey along the shore is almost devastated. It's not even bad.
Wow.
It's beyond bad. I have a lot of people. They lost everything. Houses, the complete flooding. And the crazy thing is, I don't know when your commercial is. We can go back to it. You just interrupt me whenever you need.
In about a minute and a half.
Okay, so there were 3 storms that were supposed to combine, and they didn't. It would have been 50 times worse, because thank God not that many people died, but the damage along the Jersey Shore and Long Island and Queens is unbelievable. Unbelievable.
There's another one headed up, Sam, from North Carolina.
I'm living in it now. I'm sitting now.
Yeah.
It's snowing. It's going to get worse over the next day. I don't think it'll be anything like what we had last week.
If it's going to be bad, you better run quickly to the Rockland Bakery and stock up so you have some good food at home.
We got a lot of food, but it won't be as bad. I flew back yesterday. I was on BNN. Interviewed in
Toronto,
yesterday.
the Business News Network.
Oh, I missed it.
Right, I was on at 10 o'clock, and then I had a bunch of client meetings, and I flew back last night, even though I was supposed to stay till Thursday because I wanted to miss the storm, and thank God I was able to get back. But it's pretty bad, and yet people help each other, which is the way it's supposed to be.
Good. So David, just stay on the line.
Sure.
We have David Gurwitz, Managing Director at Charles Nenner Research, sitting in for Charles Nenner. My name is Samuel Ezerzer for the Money and Business Show, or Radio Shalom, CJRS 1650 AM in Montreal. We'll be right back in 2 minutes.
Back live in studio with Samuel Ezerzer in the business headquarters of Radio Shalom 1650 AM in Montreal, Canada, with the Money and Business Show. Samuel Ezerzer is a consultant with TE Mirador, which has been providing individuals, families, businesses, and employees with truly objective financial advice and education since 1972. You can visit them at www.temirador.com. You have questions about your personal finances? You need advice in making sound financial decisions? Samuel and his guests are ready to take your call at 514-738-4100 extension 200. And now, back to the Money and Business Show.
Maurice Cousineau from National Bank Financial, and we're back with our special guest, Mr. David Gerwitz, who's Managing Director of Charles Nenner Research, and the show's coming live from New York.
He's live from
We're
New
here
York,
in Montreal.
exactly. David, welcome again, and welcome to the show. We're going to get down to business now. I know we have a lot of questions concerning, what would happen to the economy in 2013. But let's just start. We should start by saying that your system is quite unique. It's based on cycles, and they are used to predict the market's movement in the future. David, can you start with a short explanation of how your system works?
Yeah, exactly. Cycles, the English word, comes from the Greek word circle. So it refers to repeating, basically, sine curves, equidistant, because sine curve has to be not stretched. It has to be any data series, top to tops, like EKGs. When you go to a doctor and take a set of EKGs, your heart's every X, seconds. So if you take IBM's top, the computer will find that it topped every 18 months, let's go weeks, every 5 weeks, every 9 weeks, every 14, consistently. That's the whole point of it. It has to find consistency in a data series, or 10 cycles within it, so that it can predict the future based on the past. It works for stocks, bonds, commodities, currencies, economic indicators, ETFs. And Charles discovered this. Like I said, I stumbled into my piano playing. He stumbled into this while in medical school. And if I give you the background in 1 minute, it'll help understand it. He went to medical school. He's a doctor, amongst all his other talents. And the professor, this is in the early 80s, said they put more doctors on call in the hospital rooms when the full moon's coming, because women give birth at a higher rate during full moon. And it makes sense, because there's some reason that might happen. Then a month later, the professor said to Charles and the people in the class, people get admitted to insane asylums all around the world at the same time, and they don't know why, and it's not during a full moon. And then someone came to him and said, Charles, I have a company, I'm taking it public. He said, what's that? It's hard to believe. With a stock with a product that's a medical product. You're a doctor, you're going to be, what do you think of this product? Charles says, the worst thing I ever saw. The guy said, I know, but the market's good. We're going to take the company that makes it public. He couldn't understand. 3 months later, same friend said, I have another product. Charles said, this is great. You should make you a lot of money. The guy said, problem is the market's bad. We can't take it public. Charles is scratching his head. I don't understand. Bad product can go, good can't. People get admitted to insane asylums. I don't understand. He comes to New York a few weeks later. He watches a TV show with a guy named Neil Cavuto, who's a pretty anchor now and on one of the shows, saying IBM went up because of this. And Charles is watching, said, how do you know why? He goes down to the library, opens up a book, a New York Times, Wall Street Journal, and he finds in IBM, he looks at the stock for the prior 5 years, and he finds top to tops by hand, 8 weeks, 14 weeks, 22. He writes out the cycles, and he sees they're all topping the next week. Sure enough, the next week was a major top in IBM, and that's when he came up with this idea that any data series, it's easily shown in stocks or bonds or commodities or currencies, if you find cycles, multiple, not just one, but if you find many cycles, and when they all line up, because it's not always the case, either topping or bottoming, you can predict them. And he developed it, had a computer program made, wound up at Goldman Sachs for 15 years, was considered their secret weapon. And I met him 10 years ago, and we took a business, thank God, and we built a pretty big business. He also uses a target algorithm to give him price level. I'll give you an example. Last week, 3 weeks ago, he said buy puts on Apple when it got to around 705, which was an amazing prediction. But you needed to give a level as well as the direction. So in order to really predict, you want to give target, direction, and price. And he does all the three things. And then he looks at all the other indicators people do. And he's like a doctor. When you sprain your ankle, you're not sure if it's broken, fractured. You go to him, he takes 10 x-rays, and he looks at them. Charles does the same thing. Cycles, target, LE wave, MACD, oscillator, 200-day average. He lines it all up, and if they're all lining up, supported by cycles, he says we're going to go long or we're going to go short.
So, David, with the elections behind us, the big question now is what happens with the economy? First,
right.
What happens through, let's talk a little bit about what's happened to the end of the year. Is going to be more upside, and what's going to happen in 2013?
Great. Downside. Stocks are down overall until middle of December. Not all stocks, because China, you mentioned in your intro, China he's buying right now. He thinks all the cycles, the China cycles, FXI, 8 shares have bottomed, and he actually went long China. Why? He doesn't know. He says they're all bottoming. I don't really to know why. But generally, U.S. markets should be down to the middle of December. So, but he predicted it a while ago. He said in March it would pretty much stay flat, sideways, more or less, which it has. It had a down move and an up move, but he said we're going to kind of stay sideways and then be down into the end of the year. You got to remember, a year ago, he called for a buy signal on the S&P to 1449 and then revised it to 1460. That's just where it went. Next year, which you just asked, there'll be a rally and then down for most of the year.
2013 is going to be a down year?
Yeah. Not
it
all
because,
year, but,
yeah.
You know, which is kind of what you said at the beginning of the show with the elections, when there seems to be president first 2 years aren't so great, second 2 years are.
Yeah.
But that's kind of what he sees for stocks, but not, let me stress this, not gold stocks, not silver stocks, not oil stocks, and not nat gas stocks, and not grain stocks. The hard and soft assets, which Canada has a lot of, right? Should be fine starting next year.
When you say hard and soft assets, well, we're talking about
oil,
the oils, the minerals,
nat gas, gold, silver,
gold, gas, silver,
and grains. You know, potash. You know, place like that. Whereas, and gold itself is going to be on a buy towards the end of the year. That's what he's planning to look at now. And silver took everyone out earlier on in the year. Nat gas he called from $6 to $1.70, and a bunch of Canadian banks made loans to the big nat gas producers out west, and about at $5, and they called their loans in about $3.50. That forced more selling. All this is predicted by the cycle, and then we went long nat gas, which he expects to, you know, with some short-term pressure, but he expects it to go back to $5.
Do you guys have any sense of where India and China are going to be over the next little while?
Yeah.
And consequently, what effect that'll have on other Canadian things like nickel and copper?
Well, good. Now, you asked a very good question, and let me answer your second question first. He doesn't ever think, ostensibly, anything affects anything else but the cycles. You should understand, like people say, if the dollar's strong, gold has to be this or that. Everything to him is governed by its own internal cycles, and then we think about the reason afterwards. So, according to him, China's up now, and India is bottoming also, right? And you sent the chart out this week on both. But longer term, basically, copper's down 4 years. It's actually down over the next 4 years. While the other metals are up, copper is down. We do a lot of work for sovereign wealth funds, which are like these $60 billion funds run by these nations in the Far East. So they don't care about next week. They want to know 4 years from now.
But why
and we can actually predict that.
Now, it matters in Canada because we mine so much of it. I'm happy to hear nickel's going to be up, but why do you think copper's going to be down over
cycles?
The next one? Really?
Only cycles. We don't ever have a reason.
Huh.
Interesting.
So when I listened to you guys, when you were talking before about the stuff you look at, targets, averages, you mentioned something called MACD, which I'm sure most of our listeners may not know is moving average convergence divergence.
Right.
You're talking about all techies, technical indicators. I was a day trader. I was all about the fundies. Why are you... Am I correct in assuming you're all about the techies, and if so, you don't pay attention to fundamentals at all?
No, we consider cycles to be fundamental. I'll tell you a joke Charles says. When the first vans came out, Chevy van, 1970s, guy standing at the street corner, that's really amazing. And Charles says, let me take out a pad and start counting them. And the end comes out every half hour, so somebody walks up to the first guy and goes, you're the one that said that's amazing, a new type of car? You're the fundamental analyst. And they're watching Charles with the pad, you're the technical analyst. But really, if you think about it, the fact that it's coming out is one thing. The fact that it comes out every half hour is no less significant. When he called the Dow to go from 10.8 to 14.5, it's the first CNBC appearance on the site that everybody who's listening, I would recommend they go to charlesnenner.com and watch the top. You see a lot of the media. He called the Dow when it was 10.8 to go to 14,005, went to 14.2. And they had him on CNBC the first time and said, I can't believe you did this, because everything Greenspan did didn't matter, according to me. Now, he did stuff, right? You could say he did something, but the cycles had within them the moves already. So, yeah, he looks at all the technical stuff you as a trader did. He looks at all the regular things, but what he does that nobody else can do is the cycles and our target. And so we become the overlay to a lot of technical traders who find in their systems what they see, and they want to know then what the cycles say.
David, I want you to just, we're going to be going to a commercial, David. Okay, we have another 30 minutes of questioning. That's David Gurwitz, is the Managing Director of Charles Nenner Research, also sitting in for Charles Nenner. My name is Samuel Ezerzer for the Money and Business Show, Radio Shalom, CJRS 1650 AM Montreal. But first, we're going to be listening to Mitt Romney's concession speech of last night.
I have just called President Obama to congratulate him on his victory. His supporters and his campaign also deserve congratulations. I wish all of them well, but particularly the President, the First Lady, and their daughters. This is a time of great challenges for America, and I pray that the President will be successful in guiding our nation. I want to thank Paul Ryan for all that he has done for our campaign. And for our country. Besides my wife, Ann, Paul is the best choice I've ever made.
Headquarters of Radio Shalom 1650 AM in Montreal, Canada, with the Money and Business Show. Samuel Ezerzer is a consultant with TE Mirador, which has been providing individuals, families, businesses, and employees with truly objective financial advice and education since 1972. You can visit them at www.temirador.com. You have questions about your personal finances? You need advice in making sound financial decisions? Samuel and his guests are ready to take your call at 514-738-4100 extension 200. And now, back to the Money and Business Show.
Maurice Cousin from National Bank Financial. We're at the halfway point of our show with our guest, Mr. David Gerwitz, who's coming to us live from New York. He's Managing Director of Charles Nenner Research. 2 days in a row, he's on the Canadian Airways. Yesterday with BNN, and today with us. I got a quick question here for David. What position did you try out on the Expos?
I tried out at catcher.
Whoa. You were a catcher. Well, you must have a good arm.
I had a good arm, and I'll tell you a quick story. This was at Kutcher Sports Academy in the Catskills, and I was 16, and the first 5 guys struck out on 15 pitches. Right?
So
the pitcher was throwing 100-mile-an-hour fastballs, and I got up to hit, and it was at the camp I was attending, so there were hundreds of people that screaming for me. And the first pitch I didn't even see, strike one. And I walked off saying to myself, I didn't know a human being could throw a ball so fast. Right? I get back up, same thing, strike 2. I didn't see the pitch. I couldn't even get the bat off my shoulder, and I was a pretty good hitter. And I'm saying to myself, I can't believe this. The next pitch, he actually missed the side, so I got the first ball off him, right? Everyone's screaming. Next one, I said, as soon as he throws the ball, I'm going to close my eyes and stick the bat out. I have to get at least off my shoulder. If I'm going to strike out, I might as well go out swinging. And I raised the bat. I figured the ball's rising. I closed my eyes. I put the bat out. He wound up, he threw the pitch, and the ball hit the bat and flew over the right fielder's head. I was so stunned. I never saw his pitch, and I ran around to third base. It looked like I was taking him the whole way. I planned it. He was stunned because he was striking everybody out. But that was my tryout with the Montreal Expos. That was it. That was the highlight of my baseball.
Would we know the name of the pitcher?
His name was Lewis Brown. He wound up going to Harvard and was a star basketball player there.
Oh. So you must have been somewhere behind Gary Carter on the depth chart.
I was a little behind Gary Carter.
Yeah.
What year was that, David?
That was 1971.
Oh, right behind.
71. Do you guys know who our catcher
John
was?
Bateman. John Bateman, probably.
Bateman, yeah, I remember.
It was Ron Brand.
Well, Ron Brand was backup, but Bateman was the regular. Brand could play 8 positions. Because
Are you
he
sure
brought
it's not John Boccabella, or is that a few years
Boccabella is a little later, but Bateman was before there, number 2.
Yeah. I mean, that's the whole thing, how Montreal got baseball. It's kind of funny, you know.
How he lost it sucked.
Charles Bronfman brought it here.
Story.
Everybody's talking about bringing baseball here, bring baseball. When it came down to sign,
We'll get it back.
Bronfman's the only one who was ready to
Morris,
pay and
I'm
get him
telling
here.
you, we're going to get it back. But David,
Yes.
next year you have been forecasting, or the Charles Nenner Research forecasting, a decline in the U.S. economy. When will it begin?
That's a good question. I'm not 100% sure, because we haven't done the economic indicators in a while, but I'd like to give you all the 5 categories: stocks, bonds, commodities, currencies, and grains, if I may, and that might answer your question.
Okay.
Because so stocks, again, other than the harder stocks I mentioned before, for the hard assets and the grain assets, are down, even though there will be a rally somewhat into the first quarter, because the bottom, there's a sell signal to the middle of December. Gold, again, will be up. He said wait till the end of the year. He took everyone out the beginning of this year, and there should be a rally to 2,500, and silver heading towards its high in the high 40s. Okay. Bonds, which have been on a 30-year rally, right? If you think about it, rates were 18% in 1980, and they're low now. So if you bought bonds 30 years ago and did nothing, you had a gain all the time, because rates came down, bond prices went up. It's going to go the other way for the next 30 years. Not yet. It's going to probably kick in about 3-4 months into the next year. But basically, bonds are going to be down more or less for the next 3 decades. Just like they've been up for the last 3 decades, and they were down the 3 decades before that, because 1950 rates were low.
So obviously,
is PIMCO a client of yours by any chance?
PIMCO, I'm not allowed to say.
Oh, okay.
so obviously, if the bonds are going down, I mean, interest rates are going up, right?
Well, that's right. That's how it works.
That's how it works.
Now, that's a 60-year cycle in rates. Remember, high in 1980, low in 1950. You know, people forget there was a new technology invented in 1950 you might have heard of, called television. The biggest advertiser in TV, U.S. government, 1951, selling 2.5% savings bonds. The rates were low. 1920, they were high. 1890, they were low. 1860, they were high. Civil War. So anyone wants to write in, I'll send the charts out so they'll see, and they can start getting the research as a sample.
Yeah, how did they get a hold of you?
CharlesNenner.com, CharlesNenner.com. There's a big button that says
Send.
Click here and sign in, or send in information, write something that I heard it on the show, and we'll start sending you the research as a sample. So anyway, that's the bond picture going forward. Now keep in mind, he wanted everybody to buy 10-year 4% several years ago. Everyone thought, how much lower could it go? He was right. They were wrong. We're now short TBT puts. What's TBT? You guys know, but maybe listeners don't. That's an inverse ETF for bonds, meaning
bonds,
short
right.
bonds.
The T-bills.
So the bet for the next 30 years is to own at the right time TBT, because that's going to go up as bond prices go down as rates go up.
These are the long-term bonds you're talking about. Long-term.
Right.
They're 30 years?
Yes.
30
I think
years.
TBT is 20 years.
20
but
years.
That's the 30 years. So that's the bond picture. So if you have stocks down for many years to the end of the decade, and bonds down for longer, gold is up, silver's up, hard assets are up, grains are up. The U.S. dollar is topping beginning in 2014. The Canadian will be strong, actually. Canada looks like it's going to do okay even during the rough times coming, by the way, just to make you guys feel better. But if it were different, I'd tell you the truth anyway. It just happens to be a better story.
Okay, it's good to know that.
But Canada looks like it will be decent going forward, given its water resources. Then you start to say, what's the reason? We all know the reasons. You guys know better than I, but cycles seem to support all that. But it's not going to be such a pretty picture in the world.
And forget about our financial system, which is solid. This has to do with cycles. This has nothing to do with our financial system, the banks. The S&P 500, I know where we just almost touched the 200-day moving average.
Right.
What is your target for the end? I know you said the markets will be coming off till the middle of December, and then maybe going up a little bit. What is your target till the end of the year?
We don't have it yet. Good question. We had the target of 1449 and 1460 on the upside.
On the upside, but the
It
downside?
reached it. We don't have a downside target yet.
Okay, because
The computer has to spit it out, and Charles is brutally honest, as I like to think I am. He writes what he sees. If he doesn't see it, he says, I don't have a target yet, but we're heading down. Like crude, which I didn't really discuss other than
oil.
The bottom is the first quarter, but he has a target of 70. Right, and Schlumberger is bottoming in the first quarter, and Exxon's bottoming in the first quarter. So he lines up the underlying commodity, and then the stocks related to the commodity, and then the ETFs related to the stocks related to the commodity. So they all line up. He feels pretty comfortable. Sherlock Holmes says, this might mean something, you know, which, if you think about it, makes sense, but he is a doctor, so he's pretty scientific. So it looks like a big bottom in the first quarter in oil-related investment vehicles.
What about inflation? Has been in check for a little while. Do you see anything changing from there?
Long-term, definitely inflation, but he did say that we wouldn't have it the last several years, which in most things is not. Well, stocks have had inflation, I guess, for the last 4 years. They doubled, right, since 2009, when he went long, by the way. He took everyone out summer 2008 of the stock market before that crazy time. I'll never forget, everybody was so angry at him during the summer of 2008, about 2 months before the craziness started. He said, it looks good, looks fine, I want everybody out. It's like everyone out of the pool on a hot day. Why can't I go in? I don't know, I don't like what I see.
Just get out.
And then he went long in the beginning of 2009, and in the end of 2008, he said the economy would bottom in the beginning of 2009, which it did. He doesn't know why. He just saw that it did. So I want to answer your question about the economy. So the economy, quote unquote, is going to not be good overall for the next, you know, quite a few years. There will be moments of strength. There'll be moments, quarters of, quote unquote, unemployment gains or employment gains. But overall, things are going to be down.
So, David, are we in a bear market? Overall, in the overall scheme of things?
Yes. Well, not for the hard assets and the commodities.
Stocks.
But for stocks, yeah. Over the next, he said the Dow would go to 5,000. He said it several years ago. He actually had said it would be more or less around this time, and he pushed it out. But he hasn't changed his view that we're going to really go down there.
He said this on this show when Charles came on. It was actually a couple of years ago. He said the Dow will go to 5,000.
He still feels that way.
Why? What, 5,000?
Cycles and targets. That's the one. It's funny. The answer's always the same.
Yeah, I know. I know
you're looking for some greater chachma, right?
Yeah, greater chachma, exactly.
Right.
But
copper mirrors the economy, right?
Yes.
Copper's down, which he sees. The economy overall will be down. Now, we call copper Dr. Copper. Everybody knows that. Do we know why copper is going down? No. Cycles are going down. It's very hard emotionally for people to accept this because we all spend all day doing what we want. If you really think about it, a rich guy always feels he can do what he wants, but even all day you get up, you go to Starbucks, you press your iPhone or your BlackBerry, which, by the way, he called the top in BlackBerry. He called it in the high 70s.
So where's BlackBerry going? Just for 1 minute left.
BlackBerry is sideways, actually. For a year or so, I think, and then I'm not sure of RIM. We're not talking BlackBerry.
Yeah, RIM. Sorry, yes.
I don't know longer term where he's seen it. We haven't discussed it.
Okay. And what would you see rates going up? You see rates going up, and obviously you must think it's pretty soon because you already made a move on it. So you expect
rates are up for the next 30 years. However, what he's saying on bonds, bond prices are down to the end of the year, which in effect is his position. He's short TVT puts, and then he actually sees a bounce in bonds at the beginning of the year, and then after that, another move down in bond prices in the beginning of rates going up again.
And he doesn't make any projections as to unemployment, does he?
Oh, sure we do. Oh, yeah.
Housing,
We
you know what?
haven't done one in a while.
You know what, David? We're just going to go to a commercial. We're going to be talking about unemployment, housing. There's a few more questions.
Elliott Wave and Fibonacci.
Yeah. I just hope you said Mincha. Did you say Mincha before?
Yes, thank you.
Okay, good. My name is. we think of everybody here at the.
Right, it's great.
Right, it's.
Well,
anyway.
you're Canadians. You're considerate people, and of course, where you guys are, there's no politics. That's what I see.
Right.
Oh yeah, right. That's it. No politics.
No politics in Quebec. That's what I really like about it.
Yes, there's no politics.
No politics.
Except for the fleur-de-lis and the what do you call it? In the.
He doesn't know about that.
Oh, he doesn't know that. Okay. Well, anyway.
No.
It's better off this way.
Yeah, you know what? It's better off, exactly. My name is Samuel Ezerzer. I'm with David Gurwitz, sitting in for the Charles Nenner.
Canada with the Money and Business Show. Samuel Ezerzer is a consultant with TE Mirador, which has been providing individuals, families, businesses, and employees with truly objective financial advice and education since 1972. You can visit them at www.temirador.com. You have questions about your personal finances? You need advice in making sound financial decisions? Samuel and his guests are ready to take your call at 514-738-4100 extension 200. And now, back to the Money and Business Show.
Maurice Cousineau from National Bank Financial. We're into the clubhouse turn and then down the home stretch of our show. And let me run some closing quotes for you today, November 6th. Dow Jones was down 312.95 to 12,932.73. I guess that's the Obama rally right there. Yeah. The S&P 500 down 33.86 to 1394.53. TSX down 130.61 to 12,230.59. Oil's down $4, 401 to 84.70. Gold is up 470 to 1723.90. And the Canadian dollar down fractionally to 0.004 to $1.0039. We're back live from New York with our guest, Mr. David Gerwitz, who's Managing Director of Charles Nenner Research. And
yes, Brian, I know you wanted to say something.
Let me just correct you here. There was an Obama rally this morning, and about 7:15 in the morning, Mario Draghi came out and said Europe is going to be sluggish for a long time, and Germany is slowing down. That's what's going on there. Don't give me that Obama rally nonsense.
But Brian, it doesn't really matter because we just spoke with David. The cycles is just
only cycles matter, David.
Yeah, but Mario Draghi coming on this morning.
It doesn't matter.
Mario, that's what
but Germany's been slowing down for a while now, hasn't it?
It doesn't matter who gets them. Right, David? David, does it really matter who?
It doesn't matter. You know,
it doesn't matter.
We were meeting with the New York Times about a year and a half ago. They didn't do a story because they couldn't get past. Charles is saying it doesn't matter, and they basically believe in the great man theory of history. So this guy shows up, that guy shows up, and he's saying this, he's saying that, and Bernanke, or like, we put great reverence. We shouldn't, but I'm saying people do on these people. And what cycles, and the whole idea is that it's the cycles more important than the people. Charles always says the U.S. elected Reagan at a cycle bottom, and they elected Carter at a cycle top. So was it Carter that caused things to go bad, or was there a subconscious feeling we have to bring in a guy to do this to ourselves, and the same thing with Reagan at the bottom?
Go on.
So, you know, Obama caught a 4-year double in stocks, right, basically. Came in and it doubled 4 years. Did he do that? I don't think so. You know, he came along, and a lot of stuff was set in motion before, and that's really the point of what we're saying, that all this news that people talk about and this and that is all set in motion, and they don't have the say they think to do. I was saying before, people think they all have, we turn on lights, we turn on cars, we switch on radio show. We're all doing stuff we kind of feel we have control over. So when we come to this, we think there's control and there's government input and stuff, but we don't agree. It's a very different, like you said, it's a unique perspective. We think it's all set in motion. Otherwise, how could you predict anything? You know, he called that gas from $6 to $1.70. It went. What did he know? It just went. And then the news came out. Fracking was so prevalent at $6. Then they got to near 70. The legal challenges started more. And then, so things appear at cycle tops and bottoms to reinforce what it is. You're asking about unemployment stuff?
We were, but I just want to throw in something. What you're describing, the way Charles answers this and deals with it, is a whole lot like Nate Silver responding to Joe Scarborough saying, well, you know, Joe can disagree with me. I guess we just studied different math.
That's an interesting question. I have to think about it.
But yeah, we were asking about the unemployment rate.
Yeah, so let's talk about just economic indicators now. I'm gonna hit 7 different things because economics is a bunch of things. There's something known as the Baltic Dry Index, which you guys are familiar with. It indicates how much transport is done. We covered that in September. The bounce should continue in December. There, Schlumberger is really bottoming the beginning of a good low towards in the end of this year into next year. Then we covered in September, and anyone writes in, I'll send it to them, U.S. economic indicators, 6 charts, right? So the first is non-farm payrolls, right? Quarterly cycles look toppy. Based on the cycles, we expect non-farm payrolls to be lower into the first quarter of 2014. Unemployment, quarterly cycles, the cycle that predicted a high is turning down again, meaning there was going to be a short-term pop in employment, which is what happened, but longer term it's down. ISM, Institute for Supply Management, projects weakness. CPI, right, quarterly cycles are down. Producer Price Index is bottoming only in the first quarter of 2014. And then GDP, quarterly cycles, the cycle is close to a high. We said that in September and turning down.
What about the housing? The housing.
Housing. Here's a funny answer.
Is there recovery? I know there's been a recovery. Yes.
Good question, because I have a lot of real estate guys.
Yes, there's a lot of real estate guys who are listening, actually.
I know.
Yes.
Hi, real estate guys, especially in Canada. There's a lot of real estate guys in Canada, especially in Toronto. I said, I didn't get a chance to say it on the air, but I said to the people that interviewed me, you should change the name of the bird. Whatever the bird is of Ontario is, you should change it to the crane, because that's all I saw on the streets of Toronto were cranes.
Cranes.
Right? So here's real estate. 2 guys real estate. 2 things to think about. Your real estate is going to go down over the next 10 years.
In North America or just Canada? Or
in North America.
In North America, okay.
And you should stay in it, because it's better than putting money in banks that are going to fail. Right?
Wow.
That's straight from Charles. That's A. B, guys in real estate can hedge real estate by knowing what REITs to short. Right? Because if they're long bricks, which in essence real estate guys are, right? And there's going to be something going the other way in that area, you could hedge it if you know what REITs to short, and we cover that. We do custom work for a lot of big real estate guys who are not getting out. Obviously, it's multi-generational, but they want to hedge it like everybody else does. That's the true definition of a hedge. There'll be a bunch of REITs that are going to get really beat up. So that's the story with real estate, that it's down, but it's not a bad thing to be in if there are other things that are worse.
Any bottom for you at the real estate market? Are we talking about 10 years from now?
Yeah, 10 years from now.
10 years from now, eh?
Yeah.
Wow.
Look, let's take a look. 2000 was a major top in stocks. Are we the same now, higher or lower than we were in 2000? Now, the answer is we're the same.
We're the same.
So
it's just hard to believe because the housing industry...
later,
yes?
We're in the same spot if you put into the market then and closed your eyes and came back. You haven't gained a penny. Now, obviously, 1980, you did well. 82, right, till I remember when the market was 1,000, and it shoots up. So long-term perspectives, which is what we get from the system, gives us a way to see things that maybe others don't. And so that's what he sees for real estate.
All right, so basically, you do think that unemployment will go down?
Unemployment
will go up,
is going to be worse. I mean,
it's going to be worse.
The job situation will get worse.
That sucks. All right, let me ask you a quick question, because I used to deal with Fibonacci's and Elliott Wave.
Right.
And I didn't understand it, and I wasn't sure that I believed in it.
And we have about 3 minutes left.
What's the difference between Fibonacci numbers in terms of where the markets are going to go up or down, and Elliott Wave, and do you use it? Do you buy it?
But let me explain. Elliott Wave is based on Fibonacci. Fibonacci, every number is the sum of the previous 2, as I discussed. So 1, 1, 2, 3, 5, 8. That's an ongoing pattern. But everyone listening, Google Fibonacci. See what a genius he was and how many patterns in quote-unquote nature come from that pattern. If you take each number and take a look at the ratio of that number to the next number, like 2/3, 3/5, 5/8, say 13ths, 1321. The pattern keeps approaching some number known as 0.618. That is known as the golden mean, right? 0.618. Those are the Fibonacci retracements that you're mentioning to me, Robin, that are what you probably heard of. You can have a retracement of 618, 1.618. So think about that pattern in nature where the ratio of each number as it grows to the next one is around this 0.618. And in the market, you get moves of all categories in all areas that are often stopping at 0.618. The flash crash from 3 years ago was a 4.2 exact move, which is exactly a Fibonacci retrace. So what you say is true. Charles does look at Elliott wave, which is based on math, and that's another of the things he looks at besides cycles and target. But it's there, but very few people are smart enough or talented enough to use it. But it does show that it's not random moves. I guess that's the summary of that.
So, David, we have maybe 10 seconds left. How do we get in touch with you and Charles if anybody wants a little bit more information on what's happening in the markets, gold, and so on?
They should go to GoogleCharlesNenner.com and just write in and say you heard the show. And we'll have them start watching the research, which I like you guys to watch also. And that's how you get started. It's real simple. We make it real easy. We assume everyone has ADD. Research is written Monday, Wednesday, Friday, and Sunday. The update takes 4 minutes to read, covers 11 categories. Charles writes it. I edit it. I turn it from his Dutch English into my Bronx English. And we have thousands of clients all over the world, and we don't manage money, we don't broker, so we can be brutally honest.
And how much does it cost to join
with that, we don't put it. We have different levels of service that we'll discuss. We don't have any printed lists because we have people with different needs.
Gotcha.
Exactly. So, David, I want to thank you very much. Hopefully you'll come on again, God willing.
I'd love to.
Yes, and we had a lot of fun with you, and thank you for all that information. And we say hi to Charles Nenner if he's listening on, and hope he'll feel a little bit better, obviously.
Right. Thank you so much.
Thank you. And I want to thank Morris Cousino, and I want to thank Brian Woloski. And what we're going to do, we're going to be listening to the presidential election, the victory speech of Barack Obama. Again, my name is Samuel Ezerzer for the Money Business Show Radio Show. I'm CJRS 1650 AM Montreal. Happy capitalism, and God bless you.